Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday. Wow, October 28th. Great to be with you guys this morning. It's been an interesting week. Quiet session on some of the majors, big mover on some of the other majors, but long list. So on the menu today, we'll hit DXY. There's not really much to look at there. We'll look at DXY, Aussie, same deal. Dollar CAD with a move yesterday. Sterling, oil, big move at support. SPX, dollar Swiss, Kiwi dollar, Euro dollar, dollar yen, and gold. Any other questions or trade setups, guys? As usual, feel free to throw them on the message board at any time. I'm going to go through this rather expediently today as we got to get through this. Got a time crunch here. So let's jump right in. So DXY, here's what it looked like earlier in the week. We had essentially been in this range right below that major resistance that we ran into right here at 94.47, 94.65. The last 3 weeks have just been a pullback off that level. We've warned that the pullback might have deeper to go, but the entire trend is within, or the entire pullback rather, is within the confines of the broader uptrend. And again, I continue to show you this line every single webinar because it's really something I've just really been tracking. That basic trend line, the original slope from 2011, still all the major inflections that we've seen, resistance, resistance, that's still resistance. So at the end of the day, we still got to pop through 94.47/65 to mark the resumptive move for the dollar. If we do get it, it's likely to be rather sharp. Until we do, that's still critical resistance. Here's what DXY looks like on the daily chart as we head into the open of US trade today. By the way, we just got the release of US GDP for the third quarter, excuse me, that's the advanced read, came in at 2%, much weaker than expected. We were expecting a print of 2.6. Previous in the second quarter, we got a print of 6.7, excuse me. So slightly a much more slowing of the GDP growth rate than we expected. But just to show you where we are, okay, there was the week monthly opening range. It looked like it broke lower, didn't quite get a tag of support before we rallied. We're right back at the median line. If this is still heading lower, that median line should hold resistance. Key support still 93.36. So we're not out of the woods yet. Again, here's what it looks like on the daily chart. There's not much here, okay? Intraday, even for the week, it's been a slow grinder for the DXY. We've had some really nice dollar setups, but as far as the DXY, it broke out of downtrend resistance, and we've just been sitting in this near-term range right above the weekly open. So near term, I would love to see if this thing stretches towards 94.15, 94.18 might be an exhaustion point for the last drawdown. But at the end of the day, we've just made a simple weekly opening range and we've been sitting here ever since. So looking for some clarity on this. I don't know if this GDP figure, which is again weaker than expected at 2%, is going to be the factor, the catalyst that we need. But certainly heading into tomorrow, guys, the big event risk will really be this flurry of inflation data. We get core inflation data out of the Eurozone, core PCE, the personal consumption expenditure, the Fed's preferred inflationary gauge in the US just a few hours after. So heading into the close of the week, we do have a potential for some event risk here, both from the Euro side and from the DXY side. Speaking of the Euro, here's what Euro dollar looks like. And here's what it looked like last time. My last update on Euro for you guys was back on the 24th. It was right into the open of the week. One thing I just wanted to show you, on the daily chart, we're really very precarious about this basic resistance. Where are we? Here's the daily. Oh, here's the daily, right? Very, very well-defined range, right below that, that 1621 that we buckled, which is right here. So we fell back below. That's been near-term resistance. The weekly opening range is preserved right above the monthly open. So real tight stuff. Here's what the intraday chart looked like into the start of the week. On Sunday, here's where we are now. Just playing the levels. Oh, sorry about that. So again, side by side. Here's where we're into the open of US trade. We rallied into that region. Perfect hold. Break below near-term support here at 1620, 1614, but we didn't get the full extension. Again, the last level was right here at the 618 retracement for the Euro. You have the 2019 high. I was looking for 1580 into 1570. we bottomed out at like 82. So look, I don't know if we're going to get the final drive into there. If you're holding shorts on this, you know, a good level to look for something. I wouldn't necessarily bail, but I would be looking to reduce short exposure, lower your protective stops to break even or better. You know, I don't want to get caught out on that. If it breaks here, guys, by the way, just as a reference point, if we break below this, there's really nothing until 15. I mean, the lows, maybe 15.25, right? That converges on slope, maybe down here. Okay, but there's really nothing until 115, which is again the 2019 high day close, the 50% retracement. So we're at a near-term major support zone here for the euro. We can see how this pans out into the close of the week. No more major data except Friday. Again, tomorrow rather, you get those Eurozone inflation data right ahead of the US. So this actually might still be a pretty decent play heading into tomorrow. Any questions on euro? So we got the initial move early in the week, got us all excited. Then we got into this tight coil. And a lot of the trades, guys, have been doing the same thing. So that's number 1 and 2. I do want to, where was that last euro? Okay, do want to go over number 2 from this update was dollar yen. And this one's been another stellar player. I got a more recent update than this CAD, which we'll go over. But dollar yen, here's what it looked like into the open of Sunday trade. Okay, we highlighted that 236 retracement. It was 113, 30, I believe, some change like that. We drilled into it just a bit into the open, popped higher into the upper parallel, and then broke. So I haven't given you an update on this in a couple of days, but the levels haven't changed. Again, I'm going to take a top-down approach here for dollar yen just to show you how significant that resistance zone was. Doesn't matter how sharp the rally was on the way up. A lot of people were saying, Mike, you're crazy to be calling resistance here, but man, 2018 high, 786 retracement from the late 2016 high, median line resistance. It was worth a shot. Okay, it's worth a shot. So look, from the weekly chart, it's important to understand that momentum is still in overbought condition. This needs to pull back below 70 on the close of the week to suggest that you have a near-term exhaustion high in place. If this closes the week back above 70, guys, you know, this thing can stay above 70 for a month, 2. It'll rip. So right now, tentatively, we are at major resistance, 114.55, 114.92. That's on the weekly charts. Daily charts look similar. Okay, here was our last update, or here's the most recent price action. What looked yesterday to be a break below the multi-week channel has already clipped that 236 retracement, and that's what we're sitting on, 1338. A break below this would be an objective opening range break to the downside, looking for a near-term pullback. Here's what it looks like on the intraday charts. Well, yep, here's what it looks like on the intraday charts. Here's what it looked like on Sunday, and here's what it looks like now. Okay, so drill down into this level, rebounded higher. We failed right at the upper parallel before the break, drilled right down to that 236, right into it. So for me at this point, guys, if this is a break of a multi-week uptrend, which you can see right here, rallies should be capped by 14.15, downside break below 113. You have that lower parallel, but because of the range we're in, guys, if we pivot below this region, which is again is Friday's low, that would inherently be a short bias near-term breakdown. 112.56 would be a basic 38.2. That's all determinant on us breaking this low. All things held constant, we're still sitting in the weekly opening range. So no clear-cut guidance per se yet for dollar yen. You know, like I said, if this break of uptrend support is legit, this is the max. You should see any intraday rallies capped. You need to break below 1330 to get that corrective move. I'm flat on this, guys. I haven't touched this, but kind of wish I'd taken that short. If I had taken that short, I would have been out by now at the weekly open. So still respecting the range, but looking for this near-term breakout over the next few days. And again, tomorrow's major US inflation data could be the catalyst we need. All right, so that's number 1, 2, and 3. Last but not least, I also wanted to go over from that update back on the 24th, the gold levels, because this one has been sort of a heartbreak. So it hasn't really given us a material break in either direction. Here's what the daily chart looks like. I mean, I'll show you the weekly chart too. This has been null and void. I dropped that pitchfork. Here's what it looks like now on the weekly. You know, basic trend line off the low from May of 2019, the 2020 low, this year's early April low, support, break. It's been resistance for the last 3 weeks. Not only that, you got the 52-week moving average, yearly moving average, converging on slope resistance, former support, now resistance. So this whole region is littered with stuff. We talked about this on Monday. 1803 is the moving average. 1825 is the 618 of the recent decline. 1850 is the high week reversal close for the year. And that's your breakout. Bullish gold, but the bullish move is still testing uptrend resistance here. So what do you do? Well, the daily chart looks like this. All right, or this is the intraday. The daily chart looks like this. There's that line in blue. I know this is a very messy chart, but there's that line in blue we were looking at with the weekly chart. Resistance, resistance, not quite divergence, but it's not the strongest bull. And you're still holding that 100 at 1809. So for me, you know, the ideal scenario is that you actually do see the breakout here. Travel into 1825. The July high day close gives you 1829. Look for a larger reaction there. Pullbacks should be capped by the lower parallel for breaking higher. But the whole focus right now is on this immediate stretch. Can you make it through 1809? Or if you buckle back below 1790, you're looking for a move back towards support. This is a huge inflection zone. What you see right here is the 100-day moving average. Former trend line resistance, 1 touch, 2 touch, 3 touch confirms break, now support, and the 618 of the recent decline. So for me, the last 3 days, in all honesty, I've been looking for a break of 1809, 1971 on a close basis, but we haven't been able to do it. Intraday, short, spikes above 1809, short, spikes below 1791, but on a closed basis, this is the range of focus, okay? 1791, 1809, we need a breakout of this zone. Now, a pair that I will caution you, or an asset that I will caution you tomorrow will be extremely important. Remember your traditional classical uses of gold as both you know, a safe haven trade, and more importantly, that inflationary hedge. And if inflation's running, you know, 4% right now, you could see that bid. Now we can go into the dynamic. I don't want to get into it today, but we can go into the dynamic of does Bitcoin catch that inflationary hedge? And I do think there is a very strong argument to be made that in fact you are seeing investors basically using Bitcoin as an inflationary hedge, as a store of wealth, even as risk off flows. As crazy as that seems on an asset that can drop 80% in just a few months, that's sort of the beat that we're getting with the current market dynamics. So for gold, I'll be watching this one tomorrow. We need to see a clearing of this immediate range on a closed basis. Topside breach, that's still critical resistance on the near term. All right, so that is gold. Here's the intraday chart. I don't really like it. I'm just showing it to you right now because of where we are. The levels are the same from what we looked at on Monday. There's that 100% extension pullback. Okay, this is a Sunday update. Once again, tested that, pulled back again, and we're just riding this median line, literally, since the start of the week. So all things held constant, one thing I was looking at ahead of the webinar today was just this simple contractionary range. You know, we can even do something like this. Okay, it's near-term contractionary range. Topside pop, that's big whopper resistance, 1825, 1829. Downside break, you do risk the correctionary move towards 1761 first and look for a reaction there. But I'm looking for a buck on this over the next 2 days. And again, major inflation data might be the catalyst we need. So that is gold. Number 4, any questions on where gold stands at this point? Okay. We had another update on crude. Just want to see. You know what? Oh, on the 21st. Wow. Yeah, it's been a while. I want to show you this, guys. This was our last Bitcoin update since we've talked about Bitcoin just now. I just want to kind of show you where we've been. Here was this I presented to you back last week, the 21st. And recall that we decoupled from the 2018 price analog that we were following with this break here into early October, excuse me. And now we've been following what seems to be a price parallel of the 2020 October breakout. And I showed you this on Monday. So we're basically taking that October breakout from last year, which was very similar, right? You got a nice consolidation range. Oh, where was it? Excuse me, I'm a little messy here today. Here it is. You got that nice consolidation range into September before the October breakout last year. That's the rally. If you take a parallel, okay, of that rally or a price analog, here's what it looks like to the breakout that we just saw. So again, it would suggest a period of prolonged gains for Bitcoin. It's not going to be without interruption. It's not going to be without your kickbacks, but we're not looking for 50% declines. Remember the previous year, we got 60. You know, back in 2018, it was an 80% decline. As the years unfold, you start to see that the pullbacks are getting more shallow and more shallow and more shallow. Continues to suggest you're looking higher. Now for Bitcoin on this pullback, 2 levels I was talking to you about on Monday were 58.98 and 52.281. Both of these levels, I'm looking for possible exhaustion for the pullback. This is bullish inval. I don't want to see anything break below 53. I don't think you will. But in any event, on any pullback here, that's a level of interest for possible reentry. Key resistance is still 66,325. Guys, that's just not the high. That's also the 618 extension from the advance off the 2020 low. Okay, from right there. Okay, 1, 2, 3. So you got that 618 extension, which converges on the record highs, on the previous record highs that we made back here in April. It's 66,300 into 64, let's call it 65,000. That's major resistance. So that's all I got to say on this. You know, any downside that you see, look for support 56,000 and change. Topside breach above 66 will likely be another runner. And the levels are pretty clear on the upside there. 77,600 would be your first breakout target in that scenario. Any questions on Bitcoin? I'm watching this more and more, guys, and it's not because every single financial news media in the country is asking about it. It's because the technicals are continuing to become clearer and clearer. The more uptick and the more volume you get in this asset, the clearer the technicals get. Here's what it looks like on the intraday chart, just to show you. It's the same setup, different slope that we've been following. No change, by the way, from that slope that we were following from the September lows. But here's failure with a pop through the median line, failure, pop through resistance, failure. It was very, very strong tell. Okay, here's median line support, bounce. Here's the break. There's the key support that I'm looking for. If you get to drop it to 56,281, be a really nice 2 equal legs, uptrend support, nice area to find some more basing. At the end of the day, you need that topside pop above 66,300 to get resumption. Possible bull flag? We'll see. Okay, so 5 is Bitcoin. Moving right along. Here's Aussie. It's been a little bit of a boring trade for me. Here's what Aussie looked like yesterday, or a couple of days ago. This was back on the 26th. This is a very, what's the word? Lackluster. You know what I mean? The levels played out pretty well. Whoops. But it just hasn't had any Momo, okay, since the start of the week. So here's your weekly open, okay? Here's what we said we were looking for. You know, it was either rejection of this major resistance confluence and a move lower to get that near-term correction, or if we break, you're looking for the July high breakout to even give you an even more accelerated rally. So what's this? I don't like this. You know, nothing's changed. It's just been a slow grind into uptrend support, but hasn't really broken higher. Look at this. It's a very simple weekly opening range. Pistol to my head. Let me take you a step back. Here's where Aussie is trading. It's a big level. It's a big level. Yeah, the 52-week moving average. The 100 off the low. 1, 2, 3. The lows from March and the 25% parallel. All of it's right here. We highlighted this last week, and that's exactly where it petered out this week. Still resistance. So that's my take on Aussie. You know, I do think you could flirt up and dance into this level. You can, you know, spike into it, fake out some people, but this is a major, major level. Again, the 100, there it is. The 50 off the high also. Even slope resistance. This slope that you see here is just a parallel of that gradient extending off the highs from the late July and August high. 1, 2, 3. So it's big resistance. You know, as it stands right now, and I was looking at this earlier, it's extremely subtle, okay? But you can see divergence in price. Price action with a higher high, the oscillator not confirming that high in price. So a subtle price exhaustion on the daily chart is sort of the hallmark warning, right? So that's my take on Euro, guys. I mean, on Aussie rather. All things held constant, I'm looking for, you know, exhaustion, either a punch into this level and a failure again, or if we do break this slope, I mean, the weekly range low is over here, which kind of has me a little concerned. Tight stop against the highs would be the way to play it. Monthly, weekly open, take a limit. 74.50, take a limit. Okay, it's a basic 30. That's key support. So I don't like how it's trading, but I like it lower. I like a little pullback from this level, at least to break this uptrend support. So we'll see if this one wins for me. Any questions on Aussie? That is number 6. All right, dollar CAD. So here's Looney. I know on the swing side of things, Jamie took a stop on this one, but yesterday he tweeted you guys, he actually took a long right back on that stab in 23, and it's worked. I was sort of in disbelief, but what a reaction. Pretty decent play. Let me take a step back again real quick to show you. Dollar CAD on the weekly chart for me has been really messy, and this is why. This is a major support zone, the 2018 low close, slope support, and the 618 gave us a range of like 23.14 to 23.66. The last 3 weeks have been in this range. So, man, what is that? Pistol to my head, I think you get a rebound. You got pretty strong support, but the stretch that failed this week is what's concerning. This stretch failing right ahead of 24.60 is kind of what's making me a little uneasy. Now, it's true, again, the BOC yesterday came out a little bit more hawkish than expected, and you saw that drill down. Again, that's CAD strength, right, and dollar CAD lower. But this support zone for me is still something we're watching with pivotal on a weekly close basis. So watch that into the close tomorrow. The daily chart looks like this. So typically I would remove this 618, guys, and just scratch it, but I just wanted to show you here in the webinar how price has been just straddling this major key fib. The 618 of the yearly rally, the entire 2021 trading range. It's also the objective swing lows from March. We've just been straddling it this whole month. So just forget that for now, okay? Make believe that level's not there. We came off of downtrend support, rallied into downtrend resistance, major lateral level. We're watching at 24.40, remember? And we jerked lower. Puts us right in the middle of the weekly opening range, and that pisses me off. So I don't know what to do from here. You know, here's what it looks like again on the intraday chart. If you played the long yesterday, I already bailed on it on a 2360 tap, so probably should have held on to that. Anyway, hindsight's 2020. From here, if you're not holding a new position, is there anything for us? It's tough. I can't justify it. You know, if you see a break above the swing highs from Asia, maybe a stop against the swing low from Asia or Europe to get the stretch. It's mid-range, not my favorite ideal scenario. I like trading against weekly highs, weekly lows, you know, more significant levels. So this was a stop against the low is very, very simple, right? You're not really risking much. You're in the middle of the weekly range. In fact, this is the weekly open. Add some sugar on that 2360 region. This is actually where we opened the week as well. So look, man, dollar CAD has a pretty clean weekly opening range. You know, it came off of a pretty strong bounce of support again. You'd need the breach above 2440 to mark resumption. Otherwise, even if it rallies into 2422 rather, you're still in the downtrend. You know what I mean? You're still in the downtrend. So I'm flat here. I wish I was in a position. I'm flat. Re-entry on the long side, I think is going to be a risky trade. I hear you. I see your question there. I think it's a risky trade, but it's something I might be tempted to do if we do get some strong inflection, if we get some strong catalyst into tomorrow's data. I don't think I'm going to touch this per se today, but tomorrow with the inflation data, both from the US, Euro won't affect this one per se, but from the US, I think we'll get the larger play for the dollar. Does that answer your question? I'd be hard pressed. Again, my humble opinion is it might fail again on a pullback and it does break higher, but from a trading standpoint, it's a tough ask to take that stop against this last swing low. There's no justification for there yet. It's at 30. So we will have to see. Questions on dollar CAD? All right, that is number 6. That's number 7. Number 8, here's the British pound. So what do we do with the pound? Here's what it looked like earlier in the week. So we had focused on a major resistance zone. The major resistance zone that we talked about was this 138 into like 138.30. Okay, it's the 786 retracement of the decline, but it's the 100% of the advance. And we started out last week, we rallied into that region, pulled off into the start of this week. We said, look, that's still resistance. If we break uptrend support, look for the pullback. Well, it broke uptrend support and then it caught support at last week's low. So what the heck is this? Another one where momentum just stalls, right? Multi-week uptrend break, you'd expect to see a move lower. Now, if this is it still could play out, pull back, we maybe found support at last week's low, resistance at that slope, and then move lower. That's your classical break of support, test as resistance, could still be the play. But I just don't like that we're still in a very tight range right below resistance. So for the longer term, let me take a step back. Here's sterling on the weekly charts. We did, talk about, and I published a piece on Daily Effects yesterday about the fact that we're just straddling, the yearly moving average, the 52-week moving average. Now, from the weekly chart, I would have liked to spike into this zone and then a pullback. You need to break below 136.70s to get the resumptive move again. Daily chart looks like this. Okay, there's 100%, like I said, off the low. 2 equal legs. Still constructive above 36.70. That's how I'm playing it. So even if this pullback does materialize all the way into former uptrend, former consolidation support, very decent pivot, I still think that could offer a low. But as it stands right now, the intraday, it's just such a tight range, guys. I don't have anything to say on this. Questions on sterling? BOE is on tap next week. All right, that is number 8. Number 9, here is crude oil. So beautiful turn. Our last update on crude oil, we were essentially warning of the turn. If you go back to the 24th, okay, here's what the update looked like. This was the open on Sunday. We talked about that 2013 high, saying 85.61 is your first level to which you look for a larger reaction. It's the objective 2013 high. It's uptrend resistance. Here's what happened. right? It turned, what, 20 cents ahead of that 85.61 level, again, the 2013 swing low. Pull back right into last week's low. Again, very similar to what we just saw in sterling, right? So here's what I showed you guys last night, and here's where we are right now. So what looked like a break yesterday of the weekly opening range ended up being a decent play. Here's your weekly open. You set a high, you set a low, you go for a test of the high and fail. The break of the weekly range low has you looking for a late week low, Thursday, Friday low. Well, it's Thursday. Here was the drop into support, last week's low, uptrend support, and the median line for the current downtrend. Could we get some rebound here? Sure. While below that parallel, you're still at risk. You're still at risk. What also looks to me like a 1, 2, 3, 4 has me looking for a final 5 for a possible 5-wave decline lower. So I'm liking it. But right now, today is going to be the test. You're at the pivot. You're at uptrend support. This is the level. If it breaks, likely going to see an accelerated decline. But that's your major level of support here. Any questions on where this is? Just real quick, again, reminder, oil on the weekly charts. I mean, we're big. If the market closes as it stands now, it would be the first outside weekly reversal that we've gotten on the rally since the 9-week stretch. And again, if this materializes, that's your quintessential exhaustion trade once more. All right, questions on oil? Pullback is at near-term support now. Look for resistance ahead of 83 if it's going to head lower. Okay, that's number 9. Number 10, real quick look at the SPX. I've been showing you guys the levels here as well. It's been very interesting, and I showed you this, I think, was it last night? Yeah, 27th. Yeah, last night. Here's what it looked like. So from the top-down approach, guys, you can't make this stuff up. Here's the weekly chart. I just wanted to highlight where that 100% extension comes from. It's the 100 off the low. That's 46,000. Excuse me, 4,616. But just ahead of that, on the daily chart, we were highlighting former slope support for the year, the uptrend, broken, resistance. We got resistance again this week, right? So that first resistance pullback, breakout, again, near-term pullback. Is this going to be terminal? Is this a high to fade for a larger? I don't think so. But if it is a well-defined Elliott wave count, it's a 1, 2, 3. You look for the pullback. You want support ahead of 44 for the final 5 push into the highs. So cautiously looking for the pullback. Don't think you get much. One more breach would satisfy a very nice Elliott wave count towards resistance at 46,016. Keep an eye on this. It's interesting that you're seeing SPX ahead of the cash market open here in half an hour. Still performing pretty well despite that weaker than anticipated GDP figure that we got. So sentiment well poised into the US Open here. There's a 618 extension before the 100. My man, are you looking at this one on the way up? Jay, you continue to impress, my man. Love it. Yeah. 45. I just don't want to keep. I try to keep the charts not so messy, but yeah, absolutely. 45,000. 4,500. 888. 4580. 4,588. Really strong result. Yeah, I'd look at that. Right now, though, on this initial stretch, excuse me, Jay, what I would usually look for is the high day close. So once you make a new record high, the close of that session on the pullbacks, whenever the pullback comes to test back as resistance, that's actually my first level of which I like to see some sort of inflection, which we're at right now. But I do love that 1618. We'll leave that on there. Good eye. 618J, it's your new name. Love it. All right, so, the risk is there, guys. Maybe a little bit of a pullback, but at the end of the day, that's where you need to be. That's what you need the level to be to go for a test of that 4616 level on the upside. Huge. absolutely paramount. On the event that you get the pullback, just the basic 236 gets you 45.20. And if you look at the intraday chart, and this is the chart that I've been showing you guys, that's actually on par with the uptrend. So just a basic pitchfork off the low, high, low. Here's the median line, a little bit of a wobble, right? Here's the break lower. If this is legit, resistance ahead of that 46,000 essentially, or 4,600, there's a 236. Be a nice area of which possibly to find some more support on that pullback if we get it. Questions on SPX? Okay, the last two on my end aren't so exciting, but I've been following them as per your request here. 11 and 12 guys are Swissy and Kiwi. Here's dollar Swiss. Really just a very uneventful trade this week. The only thing I've been tracking on this one is just I'm looking for a break of the weekly opening range because where we are. We're at major daily support based on the 618 retracement from the advance off the lows we made in July. Nice pivot in price. Last month's open downtrend support. All right, so I did like that bounce. That bounce found resistance again, working with some parallels here on the intraday. Found some resistance on this parallel, which is just again the same gradient. Saw some really decent pivot action along that slope. So it puts this really simple range in focus. Forget 92. It's just there as a reference. That was actually the low close that we made there. But scratch that. This is the range we're looking for. A downside break below this, 91, 90, 90. Okay, bearish invalidation, 92.30. So when was the last update on that? Yeah, here's last update on Swissy. So same levels, right? Same levels. We came off that support. That 38.2 is still key resistance. The only thing I did on this one is add this new slope series. So if you take that parallel and just drop it down to that low, you'll see another really nice clean slope in there on the inside. So neutral, sitting at major support within the downtrend. Watch dollar Swiss into the close of the week. The other one that we were looking at was Kiwi. I prefer the Aussie setup. I think it's cleaner, but Kiwi is also setting up a very well-defined weekly opening range below resistance. So this one I just have like an alert set up. If it breaks 72.20 on the upside, or if it breaks the weekly opening range lows, I want to see what happens. Reminder that Kiwi is coming into major resistance, both on account of Fibonacci and the uptrend. So if we just look at that pitchfork we've been following, it's not the cleanest, guys. I grant you that. I don't know why we're looking at the 618 here in the interior instead of the 50. But here's what I've been looking at, right? So you've got the favorite Fibonacci confluences that I love to work off of. 618 off the high, 100 off the low. You've even got the yearly objective open, not Mike Poutros's opinion, not Jamie's opinion, fact, right? So you got 71.80 to 72.20 critical resistance. Critical resistance. The only time I would look to fade a trade like this, which is a major breakout, right, of the yearly downtrend, would be if we were to get some sort of exhaustion into this level, right? We could sit here in range and the break will just pop. But I'd need to see some divergence. I'd need to see some waning momentum. At the end of the day, guys, the weekly opening range here is ridiculously tight. Here's last Friday's low. Support, support, under key resistance. Look for the breakout here. There's no need to complicate this trade at all. Once we do break, I think you'll get a runner. All right, that is Kiwi dollar. All right, that's everything that's on my list, guys. Let me know if you have any other trade setups or assets you'd like to review as we head into the end of the week. The biggest thing everyone's looking for is going to be tomorrow's PCE inflation number. Okay, over the last couple of weeks. By the way, we're in the blackout period, right? Because the Fed's on tap next week. So obviously we're not going to hear any commentary from any of the Fed officials until we head into FOMC. But as it pertains to inflation, which is kind of the main concerning factor here, those core PCE numbers will be rather important. Watch gold, watch Bitcoin, okay? And then watch the dollar. If the dollar is able to hold support, I think it might be a decent basing, but this is still sort of the key level that we've been looking for. One other thing I didn't touch upon today, guys, that I do think is worth note is just the 10-year. We've been following the 10-year yield. I've been showing you this chart. It's been insane how accurate, how clean the rates have continued to play. Faltered at the high day close, 170, turned lower, broke back below this, and the pivot took us right back into former slope support, former slope resistance, a 618 retracement of the decline, and the close lows from back here in April. It's loaded, guys. This is insane. Watch for a reaction here. If we do break, I do think you get a larger pullback. That's Treasuries prices higher, right? Yields lower. But if this holds, it's a decent pivot for the resumptive move. I have nothing on this. I'm just looking to see how we act, how we close the week with respect to this key level at 152, 154. All right. All right, wrap it up there, guys. Have an awesome weekend. Watch that GDP print, that PCE print tomorrow. You get the inflation and US reads right after each other, 5 in the morning here in New York and 8:30, consequently, for the PCE numbers. Best of luck trading. Stay late into the weekend, and I will see. By the way, quick reminder, this is the last couple of trading days for this month. Remember the monthly turnover as we head into Monday. So any position that you have, you want to lighten the load, have well-defined stops and limits as you head into the weekend. Same to you, Jay, Steve, everyone in the room. Have an awesome day. And I will see you guys next week. Cheers.